3.0%. That's how fast the U.S. economy was growing. This is the first reading on the third quarter gross domestic product. It's our biggest measure, most important measure of how the overall U.S. economy is doing. The expectation was for 2.5%, thereabouts, but to get 3% and see that nice 3 number in the front of GDP growth, it is kind of exciting. If you want the U.S. to do well, joining us now is one of our favorite guests of all time, MacroMavens President Stephanie Pomboy. Stephanie, just your initial take on this 3% reading. How is it that we're growing at a 3% clip?
Wow. Well, I'm surprised. I want to see the details in terms of the inventory contribution versus the consumer spending, because obviously what we care about is seeing strong spending rather than just some inventory build. And I know that at least the Atlanta Fed in their forecast had built in almost a full percentage point contribution from inventories, largely due from the hurricanes that we saw. So that will be interesting to look at. But as you know, my concern has been that there's been a broad deceleration in growth. Not that the wheels are coming off, but that we've been generally churning downward to sideways a little bit since 2015. I've seen slowing tax receipts. Actually, Treasury tax receipts are now down year on year, which is a recession reading. Wow. So there's some things that just don't square with the strength of the headline numbers, and I'm very interested to find out, what the details here are. The other thing we're seeing that's a little disturbing and kind of conflicts with the strong headline spending and GDP numbers are the rise in delinquencies. So there are a couple things out there that have me concerned. And this is why I'm so anxious to see the tax cuts come through, because we need to pass this baton from monetary to fiscal policy and get some more zhuzh into the economy. Do
you think that this 3%, though, gives Congress more, that they think the economy's doing okay, there's no urgency? That's my worry.
That's the danger, exactly. I mean, since I'm looking at things like tax receipts and delinquencies and, slowing consumer discretionary spending, I'm worried. I'm sitting here biting my nails. Like, they've got to get this done fast.
Well, I'm glad you brought up tax receipts, because I'm extremely worried, because the Fed keeps saying we haven't had inflation, but they're looking at the wrong indicators. Look at asset inflation. It's been unbelievable. Look at healthcare. The price of healthcare has gone up exponentially. The price of getting a college education has gone up significantly. So when they're talking about the PCE and they're talking about CPI, those are all just like, areas for them to deflect. Asset inflation, they've even been worried about. Now, do you see headwinds coming about? Because now we're at session highs for the dollar. 10-year yields are going up. I mean, do you see that this could be the only 2-quarter GDP print that we get that's good, given the headwinds?
Well, this is what I worry about. I'm glad you talk about the rising cost of health care and tuition. Housing expenses have gone up a lot in the last couple of years. So if you strip out housing and health care, that's 40% of the increase in consumer spending. So discretionary spending, as I said, has been slowing. And actually, people are now relying more on credit cards and transfer payments to cover their everyday necessities. So I think it's a major issue. And then you've got the Fed doing QT, which isn't going to help in terms of, tightening credit conditions, et cetera. So this is why, again, I come back to the urgency of really getting these tax cuts through and getting some relief, because right now, clearly, the trend toward decelerating growth, notwithstanding this current GDP, the third quarter, is going to continue.
This is the best 6-month stretch since mid-2014 for the economy in terms of GDP, and the Commerce Department said that this was particularly interesting or strong because of the hurricanes, that we were still able to grow at 3% for the quarter. And this is the first reading. It could be revised downward or upward, but again, it was particularly spectacular for that reason, because of the weather.
Yeah. I mean, I think the things to watch going forward is what's happening, obviously, on the consumer spending front. Like you said, I think some of the data, actually, the monthly data, have been surprisingly strong over that hurricane period. We did see yesterday retail inventories were much weaker, though, and you saw auto inventories, thankfully, post their largest decline since the recession. And that's sort of the silver lining of this hurricane, is that you might have provided all these producers some relief on the inventory front, because they've been dealing with very high inventory.
Yeah, here we go. Consumer spending gain was driven by motor vehicles as Americans replaced cars damaged by the storms, and then services spending, by contrast, slowed to its weakest since 2013. So that goes into your kind of discretionary spending outside of housing and healthcare.
What about inventories in the
Yeah, I'm pulling that up.
While you're doing that, can I ask real quick about the Fed and the plan to unwind the balance sheet for the Fed? What risks do you see in terms of future GDP from that?
Well, I think we're a credit-dependent economy. You know, I always talk about how it's a car, basically, and credit is the fuel that gets it going. And we've actually reached the point where we're getting worse mileage, basically. We need more gas in the tank to go each additional GDP mile. So if you're going to start to reduce the supply of fuel in the economy, the credit fuel, which is what the Fed's basically going to do, the natural tendency of the economy is going to be to grow at a slower rate. And we're already, you know, in this deceleration phase. And the interesting thing on that, too, is bank credit, total bank lending, has already rolled over sharply ahead of QT. So we haven't begun to see the real Fed tightening, and yet credit conditions are already starting to slow down. So these, again, you know, just underscore why I'm really focused on the tax cuts, because, you know, we got to pass the baton from monetary to fiscal policy. And right now, you know, it's a nail biter.
Yeah, and trade and inventories added a combined 1.14 to the growth.
Okay. Yeah, it was supposed to add about 0.8, so that's a substantially larger add.
Yeah.
So real final sales then were 1.6.
Yeah.
So that's not, you know, that's down from 2.9 last quarter.
Whoa.
That's a pretty big slowdown. So anyway, hopefully we'll get those tax cuts and we'll get some juice back in the
real economy.
In the real economy, that would be nice.
Stephanie, it's so good to see you always.
Thank you
Because
for having me.
every time we talk to you, you always tell us something that we don't know, and it's just a different.
Well, that's
more
my
insightful.
job. I think, you know, let's focus on the stuff that people aren't focused on.
Some people kind of tell you what you've already heard 800 times. Not you, Stephanie Pomboy. Good to see you.
Thank you
so much. Have a great weekend.